Hello, everyone. Welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Harsh Gupta, who works as a principal at Flourish Ventures, which is a leading early stage global VC firm. Hi, Harsh. Welcome to ELI.
Hi, hello everyone. Hi, Priyaranjan. Thank you so much for inviting me. Really appreciate it.
Perfect. So, Harsh, so every day we sort of see an entrepreneur um, who is either trying to raise funds or already has raised the funds, dealing with VCs, but they present a different facet of the story. And this time, today, we have with you who is sitting at the other side of the table, who is providing those funds to the entrepreneurs to experiment, to do innovative things. We would love to hear your perspective on how do you think about entrepreneurship. What is your process of evaluating startups, and this is more likely to set a perspective for the founders to understand how does a VC think, what to expect when conversing with a VC, how to reach out to them, and every other question they might have about the VC world. So today we will try to answer them. So over to you. Let's start with your introduction. Tell us a bit about your background, your journey. I think you did not start as an investment professional. I think you started as a typical general finance guy. How did you arrive at the VC world? What has been your journey?
Yeah, and absolutely happy to chat today. And I think you've been covering very interesting stories from entrepreneurs' perspective. It's always good to hear their insights, and I'm happy to share a little bit on investor perspective. How do we at Flourish think about some of these opportunities as we go along?
Mhm.
So thank you once again for giving this opportunity. But yeah, I mean, as we get started about my personal background, as you said, started as a typical financial grad, if you may. I did my BCom from NM College, which is in Mumbai.
Mhm.
As I was pursuing my graduation in BCom, I took up the chartered accountancy course as
Right.
well. So I was doing both of those simultaneously. As a part of that course, you're required to do a 3-year internship, which is
Mm.
called an articleship at Deloitte. So I
Right.
took that up in the audit department at Deloitte. You do 3 years of articleship where you get an opportunity to look at companies across different sectors, across different stages, right? So audited various companies like a manufacturing plant, which was an outsourced plant for manufacturing beer for
Mhm.
Kingfisher. Right from that to TCS, Vodafone, Rediff.com, etc. So spent 3 years doing that.
Mhm.
I cleared my CA in November 30. Post that, I took up a role in Vodafone as a management trainee program, which is the young leaders program that they run. This program typically involves 3 stints across different sectors or across different departments in 3 different locations. So it started off with sales,
Mhm.
followed by FP&A, and then supply chain management. Very interestingly, this was my first time when I got to do sales really as a finance grad, right?
Mm.
Went down to a village called Dausa in Rajasthan in Alwar district, where I was actually on the ground selling SIM cards, explaining various telecom schemes to retailers,
Mhm.
interacting with distributors, sub-distributors. So it gave me a very good perspective in terms of how distribution and sales really work, right?
Mhm.
Post that, I did FP&A in Jaipur and then came to the supply chain management team in Mumbai. So it was a very fascinating experience, right? Telecom, different industry, how it works, what are the nuances. But this was also 2015, where, as you'd imagine, the startup news was getting a little bit more mainstream.
Yes.
Uh, you were still hearing about funding rounds of Flipkart. It was very fascinating with the e-commerce boom, particularly at that point of time, and internet getting more mainstream. That you would read about it every day. And
Mm.
that's when there was an opportunity with Innovent Capital, where they were just rebranding from SVB to Innovent Capital. And this was venture debt, which was a new asset class, right? Which is providing debt to startups.
Mm-hmm.
Not back then, I didn't know too much about it, but it was this opportunity of going and being a part of an investment team where they're providing debt to startups. It was a lean team. It seemed very fascinating that you would be working closely with these companies and you would get to interact and learn more about what is happening in this new age world. And back in the day when you're a little bit more younger, you have the ability to experiment and take those opportunities.
Right.
So I did that. I joined Innovent Capital in 2015, spent 2.5 years with the team there, then moved on to join Altiria Capital, which is another venture debt fund as a part of their founding team.
Mm.
So cumulatively spent close to about 5 years in venture debt, um, which the role really involved being a part of the investment team, looking at opportunities across stages, right? Right from looking at e-commerce opportunities, food tech, logistics, healthcare, SaaS, FinTech, a variety of opportunities and across stages, right? From Series A to Series E, right? And so that gives you a very good flavor
Mm.
of how this ecosystem works, right? So it gave me a very good bird's eye view of uh, how do these companies operate? What are the nuances which go about in running a company? What are different stages? How do different companies at different levels of maturity work,
Mm-hmm.
right? So I did that for 5 years, and then I thought that I want to give it a shot at moving to equity side. And having spent 5 years in venture debt, I was very fascinated with startups and was very sure that this is the sector that I want to work in. And now it was switching asset classes a little bit, going from debt to equity. So I decided to move on and join Flourish Ventures as a part of their India team, or rather the Asia team, to lead investments for Flourish Asia, as a part of the overall team. I'm
Mm-hmm.
happy to chat about Flourish, but this has been my journey. I've been with Flourish for close to 5 years now. Help them with making new investments, managing the portfolio, and learning about different sectors from a financial services perspective.
Got it. Speaking of portfolio, would you be open to share some of the good companies that you have invested in? And what I mean, whatever you feel is good to share publicly. I would love to hear that.
Absolutely. Happy to do that. But first, to give a little bit more context about Flourish. So Flourish essentially is a global fund that invests in financial services as a space.
Mm-hmm.
We invest across four different markets, which includes US, LATAM, Africa, and Asia. As I said, I'm a part of the Asia team, where we largely invest in India and Southeast Asia. We are typically an early stage fund, where we invest anywhere between seed to Series B companies. And uh, you know, from a fund perspective, we have an AUM of about $850 million.
Right.
But the way we are different is that what we like to call ourselves is a fintech fund with a purpose, and our purpose is to improve the financial health of retail customers and small businesses,
Mm-hmm.
right? The way we think about it is when we come in early and when we invest in these companies, how can they drive a systems change, or catalyze new innovation, which will drive a systems change for these end customers that we care about, right? Which are retail investors and small businesses, right?
Mm-hmm.
Um, so that's really the purpose and a differentiated lens with which we invest globally, right? So it's not just investing in another financial services opportunity, but to talk about or to invest in companies which will drive change and more systems change, right?
Mm-hmm.
This fund is an 850 million dollar AUM fund,
Mm-hmm.
and again, from a capital perspective, we are a single LP fund, which is backed by the Umidyar family, which means that we have patient capital and we can be a lot more long-term investors or long-term partners for our portfolio companies, right?
Right.
So yeah, I mean, that's about Flourish, where we are investing in fintech, largely early stage. We come with a differentiated mandate of looking at financial health with long-term capital, where we can keep looking to provide and support our companies over their journey.
Mm-hmm. So, what's so great about fintech? I think we have heard a lot of success stories in fintech, particularly, especially India is probably leading the global wave of fintech. All the great companies, be it in UPI or InsurTech, are coming out of India. But from an investment point of view, why have you, sort of shortlisted fintech only, and why not go after other ventures like SaaS, for example, or cybersecurity? So there are a lot of other areas as well.
Right. I mean, I think see, from a fund perspective, it's a bit of a fund strategy, and it's about what you can do with that capital from a fund strategy, right?
Mhm.
So one is that we wanted to pick up a vertical sector and build presence more globally, right? Rather than be a lot more agnostic, right? Because coming with that expertise, coming with that focus, there is an ability to A, be a little bit more sharper, and B, help our companies in particular domains, right? So for example, when we invest in a particular thematic, we go pretty deep in it, and
Mhm.
we invest across that thematic across the globe. Now, when these founders across the globe interact with each other, there are so many more insights which come in, that we are also able to connect them with each other for them to share their learnings that they have seen across the geos, right? So that is very meaningful for us, right? Like, how do we create these constellations, as we call it, in particular thematics in this financial services as a sector, right? The second point and the more important one is also that the end customer lens, if you think about who we care about, is largely retail individuals or retail customers and small businesses. Within that, financial services has a massive, massive role to play
Hmm.
from the overall well-being perspective, right? If done well, or if the delivery of those products is done well, that could have a disproportionately high impact on their well-being. So financial services is that angle, right? Like, how do you get loans? At what rate do you get loans?
Right.
Are these the right loans for you? Are you getting sufficient insurance? What is the kind of insurance are you getting? Are you saving well? Are you investing well? Are the right set of products reaching you? Are there payment solutions which are available to you? Historically, a lot of the good financial services have been focused on top of the pyramid. So how do you democratize access
Mhm.
to the right products to this broader mass market plays a massive, massive role in their well-being, and that's what really we are interested in as well, right? So that's why we believe fintech is a very powerful sector which will have a role to play for the coming generation and decades, right? So that's again the lens that we take in terms of choosing why fintech.
Hmm. Got it. All right. So now I'll become a voice of the listeners that we have, who are primarily entrepreneurs, and they have a lot of questions in their mind about how to raise funds. So ultimate goal is how to raise funds. So I do have a series of questions around that. I think especially after 2022, there has been a funding winter, funding crunch. The amount of funding and number of funding rounds has decreased drastically in Indian startup ecosystem. And the number of entrepreneurs is increasing surprisingly, thanks to the Shark Tanks of the India, and and everything else that is happening. And eventually they arrive at a question that how to raise funds. So I have a series of questions around that. First question is, should a founder even raise fund?
Right. No, I mean, you point out to a very good and a very pertinent point, right? See, firstly, more number of entrepreneurs coming in is actually very good, right?
Hmm.
It's the entrepreneurship that we want to push, and we want new disruptions to come in, and new innovative solutions to come in, so that we all rethink on the ways in which historically things have been done, right? Like, you know, it's the new age companies which have made us believe that, or enabled us to do things differently. Had these companies not been there, we would have not leapfrogged, or we would have not moved forward, right? Now, when it comes to the question of should should founders raise funds or should they not raise funds, it eventually depends on individual businesses, right? In terms of what they're doing, how they're doing, and it's a bit availability of capital that they have at the end of the day. So it's not a one size fits all kind of an answer. To be honest, it's more about what is the business that you're doing. What what essentially funding and capital does is it helps founders accelerate in their product development or in their product GTM journeys. It essentially helps them evangelize their vision that they have in terms of building something and
Mhm.
actually make it reach to the end customers, or accelerate that process of getting to that customers, right? And now, if a company can do this without raising funds, they might as well should do it, right?
Mm.
Now, the question really is that, can you do it without raising funds? In some cases, that might be possible, but it may not be possible in all the cases. The second question really is that, will it take you 15 years to do it, 20 years to do it without raising funds? And can you shorten that timeline, right? And that's point number two. And the third is more so to say that, can you get, via raising funds, partners on your cap table that can assist in your journey, right? Can they help you in some ways, right? In terms of attracting talent, in terms of business partnerships, in terms of giving some guidance based on companies or events that they have seen in the past, and help you be thought partners as you're building on.
Mhm.
So it really is a perspective in terms of what you are building, how you're building, and where you are in your journey, and what that capital does for you. Capital does different things for different people, right? For some people, it helps build products. For some people, it helps them accelerate their journey. So it's really different things for different people.
Got it. And the next question I have is, how do you discover companies to invest in? Do you do it through Google search? Probably you search it on LinkedIn, or maybe you listen to podcasts like us to find out which are the ventures who are talking about themselves, or do you have a AI platform that searches for you, or you simply go through your email inbox and see who have mailed me for funding? How do you search startups? In other words, I am trying to ask you, how does a founder optimize themselves so that they can reach whatever platform that you use to search for startups?
No, that's a very important point. So I'll step back here a little bit, and I'll talk a little bit from a Flourish lens, right? So the first point really is that Flourish is a top-down fund, right? We are very, very thesis driven, wherein what essentially, I mean, financial services is also massive, right? And if you pick up any of the themes within that across lending, insurance, wealth tech, payments,
Mm-hmm.
any of that sorts. And if you break it down, there are multiple sub-segments which would emerge from that, right? Um, Now, for Flourish as a fund, given we are a tops-down fund, we are very thesis driven, wherein we look at any of these sub-segments and we try to do a top-down thinking in terms of understanding where do the opportunities lie,
Mm-hmm.
right? And what is our view of where the opportunities should be. And we try to see this across different markets, right? So just to give you an example of something that we thought during 2020 at the onset of COVID, that was a thematic in and around embedded finance, right?
Mm-hmm.
Where what we said was that, with COVID, there's naturally going to be a lot more digitization where more and more customers are going to come on digital platforms, right?
Mm-hmm.
They're going to be using a lot of these platforms increasingly, and these digital platforms are going to become the natural owners of customers, right? Because given you and I, we are spending so much time on these platforms. They would have a lot more data about us, they would have our eyeballs, they would have our attention. So how can they provide a lot more to these end customers? And is embedding financial services within that platform the right method to do, right? Which gave rise to our thesis of saying that within embedded finance, there could be platforms, which could be these platforms which deliver these services. There could be plumbing, which would enable these platforms to connect backend with the financial institutions to deliver these financial services. And there could be plugins wherein if the platforms don't want to provide these services, there could be financial providers who could plug in to these platforms and deliver these financial services. So that gave rise to our embedded finance thinking, which had platforms, plumbing, and plugins as an investment thesis. And if you see, this was quite a global thesis, right? And against this thematic, we went and made investments across different geographies, right? So we invested in M2P in India. We made
Mm-hmm.
an investment in a company called Unit in the US. We invested in Swap in Latin America. We invested in Brick in Southeast Asia. So this was a cohort of companies that we did, but it was very top-down thinking. So from a Flourish lens, um, it's often looking at a particular theme and then seeing what does it mean for Flourish, how does it deliver against the financial health or financial health and systems change aspiration that we have.
Mm-hmm.
And then we go down on the ground and we look for opportunities within our respective geos to see where are we seeing these investment opportunities, right? And it's often a process of learning and unlearning, right? Because you may think of a thesis or an hypothesis, but when you go on the ground and when you meet new companies, they give you often a lot more inputs,
Mm-hmm.
and then you plug it into your thesis to say, oh, did it match with what I was thinking, or did it not match, and what are we learning more, and is there more that we need to think through, etc., right?
Mm-hmm.
So that's how Flourish really thinks, that it's very tops down. We focus on a few thematics and then we go looking out for those opportunities, right?
Mm-hmm.
So often, a lot of times, what we are also doing is that we are doing these outreach where we are finding companies which are matching with our thematic, right? Where we go down, we do a scan of what are the companies in this market. We go and speak to all the companies and find founders who are building in that space.
Mm-hmm.
Now, having said that, from an investment sourcing perspective, to be honest, there's no one thing that works. You need to have an entire engine with sorts which needs to be humming in a way, right? You need
Right.
to you need to be sourcing investments from a combination of sources. So it's a combination of inbounds where companies are either reaching out to you on emails and LinkedIn,
Mm-hmm.
uh, through your friends in the ecosystem, which would include other co-investors, investment bankers, angel investors, operators. Oftentimes, there are founders of our portfolio companies who refer good companies, right? Who tell you, okay, these are colleagues or ex-colleagues, or these are good friends who are building in the fintech space. Would you
Mm-hmm.
want to speak with them? You do your research using Google and AI to find companies in particular spaces. So yeah, I mean, I think it's a combination of different sources to identify leads, and then seeing what matches with the investment thesis that you have, and then going
Mm-hmm.
through the process of deciding whether to make an investment or not.
Got it. And let's say you have picked a segment inside a particular space, be it gold loan or payment, or let's say the new thing, fractional real estate. Let's say you have picked a segment to invest in, and there are like 10 different startups operating in that. How do you shortlist that this is the venture that we want to invest in versus all other ventures? And what are the metrics that you look at?
Yeah, I mean, again, it really depends from case to case, right? So often as I said, given it's a lot of the top-down thinking, we may have done a lot of work on the macro, right? First, upfront.
Mm-hmm.
Uh, that first is to say, do we like the opportunity or this particular space?
Mm-hmm.
Does this opportunity and space fit within the Flourish framework and the end aspiration that we have? Then the second layer of the work is that if the opportunity is good, it fits within the Flourish framework, then is the opportunity big enough,
Mm-hmm.
right? Is, you do the typical exercise in terms of understanding the market sizing, you get into the details of understanding how big can this become, and then also understanding what is the environment in and around. Are you seeing a lot more headwinds for this opportunity? Are you seeing a lot more tailwinds? What does the regulatory landscape look like? Are there high entries of barriers, or are there low entries of barriers, right? And then more importantly, what does the existing landscape look like? Or what are the incumbents in the space? Who are the new entrants? How are they disrupting the incumbents who do exist, right? And what is the differentiation that they are bringing in. Now, having done all of this work, then you would typically land up at three, four, five opportunities, right?
Mm-hmm.
Uh, who are then filtered out, which would seem interesting to you. Often, you would see that within the three or four or five opportunities, there are nuances in the way they are approaching the problem as well, right?
Mm-hmm.
So, one interesting aspect, and as I often say, that we are very lucky that with the job that we do, right? Because it's on an everyday basis that you get amazed with how entrepreneurs think, how they approach these problems, how do they solve for it, and we are fortunate that we get to hear these stories day in day out, right?
Mm-hmm.
But yeah, I mean, coming back to the point that often it's important to understand how the entrepreneur is approaching the problem statement which is there at hand. What is their take on the problem? How do they want to disrupt it, and how do they see the future? What is their vision? What can, given we come in at series A, series B, it's often also to say what does the path look like? What do they want to make the venture? How
Mm-hmm.
do they see the next 5, 6, 7, 10 years, right? Then comes the nuance in terms of the founder thinking, that what has been the entrepreneur's experience, what has been their background, where do you draw comfort from what they have done. All entrepreneurs are great, but it's unfortunately one that you have to partner with. So you choose between different entrepreneurs and different teams, how they're building, what they're doing, what their past experiences have been, how have they executed in the time frame before you came in, what do their plans look like, how do they intend to use the capital, what are the unit economics looking like.
Mm-hmm.
And that basis that it's ultimately a call that you have to take within the three or four companies that exist. Which one do you want to go after, right? Oftentimes it's also a nuance, and these could be very, very situation specific, but you may be building within a space, but what is the target customer that you're going after? And as an investor, you would think that a particular target customer has a lot more bigger opportunity than the other, right?
Mm-hmm.
There could be different cuts in terms of target customer, or there could be GTM motions that you believe probably to say that a B2B2C is better than a B2C, or a
Mm.
B2B is better than a B2C kind of a model. And it's with that segment that you're taking that approach, right? So it's a combination of those nuances which go into the decision making to finally decide that this is the company that you want to back at this stage. And given this is venture investing, uh, you always have to see how do your assumptions play out, right? Because it's often early in the journey, you go through the journey and then you reflect to say whether the thought process that you had was how much of it was correct, was not correct, how did that pan out in a way.
Got it. And where all do you leverage technology? I think these days, a lot of new SaaS and AI companies which have come up, which are aiding VC firms to, first of all, search the internet and find out which are the interesting ventures which has come up. And then there are, they'll scan through the LinkedIn and find out which venture has how many employees and many founders' credentials and lot of things. So and also they'll scan through what are the PRs that has come up, how many articles published by your story or Inc 42. A lot of things are analyzed, and then AI has become very good at giving you a short list of top three startups to invest in, or something like that. Uh, can you tell us how you at your company at Flourish been leveraging AI?
Yeah, I mean, I think for us, all these softwares and AI are great tools for us to optimize our day-to-day work and honestly make us a lot more efficient, right? Because it's about how do you cut down on your workload, how do you make the overall process of research and finding companies a lot more efficient, and how can you reduce something that used to take 2, 3, 4 hours and reduce it to fewer minutes, right? That's what AI does, right? So I mean, I think without getting into the specifics, but from as basic as to using a lot of softwares which has list of companies. There are a lot more databases. There are a lot of databases out there that have done a very good job of compiling uh, companies or creating a database of companies
Mm-hmm.
which do exist, and more than that, just having a database, just classifying those databases across sectors, subsectors, building a lot more data on what the history has been in terms of performance, fundraising, competitor profiles, founder profiles, investors, etc. So first is using that database of finding companies, and as we are doing landscaping in terms of understanding specific sectors. Often these databases also give you good information in terms of what the historical trends have been in terms of funding, how has the sector performed, etc.
Mm-hmm.
Use a few databases for getting industry reports as well, because often for financial services, it's not that you create a new industry, the industry would exist. So it's often very important for you to understand also historically what's happened in the industry, what's happening today in the industry, how is the industry performing, how are the incumbents performing, what do their performance look like, what are the key metrics that you should look at.
Mm-hmm.
Then it's about how do you use AI in terms of your day-to-day operations, right? So can you use AI to write your memos a lot more better or a lot more in a more crisp ways? Can you use AI to track for a particular company that you're looking at? What are the number of employees? How has the growth rate in terms of number of employees been? Has there been a lot of churn which has existed?
Mm-hmm.
Can you get a lot more historical information on the company, on the founders, on the employees using some of these tools? So it's a combination of these tools that you use to make the process of reaching the final decision a lot more efficient. But at the end of the day, you have to do a little bit more primary work, look at these reports.
Mm-hmm.
Uh, AI as a tool does help you in terms of narrowing down what are the research reports, what are the sources that you should go to, and,
Mm-hmm.
and it does help make the process a lot more smoother for you.
Got it. And I understand. a big step in the whole investment process is the negotiation that happens between the investor and the founder. How much valuations to, what is the right valuation of the company, what percentage of the equity to acquire, for how much money, and time frame of the invest. So not all investment comes at one go. There are, step by step credits that happen to the company's account. So lot of these terms are discussed. Can you tell us about that process? How much time it takes? How do you value the company? What is the percent of equity that you try to acquire? And how does it work? How do you go to and fro between the founder, between you and the founder? What conversations do you have? What emails do you exchange and all? I mean, whichever you can share publicly.
Yeah, I mean, see, again, unfortunately, there's no template to any of this, right? It's it's a process of looking at, and you know, there are no multiples which are templatized for companies across as well, even within a financial services business, right? So a lending company gets valued very differently than an insurance company, than a well tech company, right? And within that also there are a lot more nuances, right? Depending on the business models that you're creating. But having said that, typically when we look at a company, we look at what they're building, how they're building, what stage are they at. And given we are global investors, we also have the benefit of looking at how are these different companies getting valued at different geos, right? And then it's a combination of basis the stage at which you are, the business that you're building, how do you get valued, right? Do you get valued as a revenue multiple? Do you get valued as an AUM multiple,
Mhm.
etc., etc.? And then it's a combination of these things that you end at and sort of derive at a logic to say that this is what we believe should be the value of the company, and it's often then presented to the founder, and then there is a discussion with the founder to see what do they feel the value of the company should be and where the investors are. Again, there is no right number in terms of how much a company should dilute or how much ownership that they should give.
Mhm.
uh, but yeah, I mean, I think it's a process, it's a journey. Often what we tell our portfolio companies is not to give up too much at an early stage, which means not to raise too much, but also not to raise too little. It's often trying to find that fine balance of saying that, we believe that this is the optimal amount of capital that we should raise at this stage. This amount of capital will give us sufficient ammo to execute against the plans that we have, with enough buffer to balance out things if they do not go in the planned direction, right?
Mhm.
So it's about this. It's a little bit of art to the science of trying to figure out what the right number is, right? Because if you raise too much, you may end up diluting a lot more, or there are often challenges to say that now you have raised so much and now you have to prove a lot more before you raise the next round of funding. So it's
Right.
it's figuring out that right balance to say that, I don't have too little, I don't have too much. And because if you raise too little, then you don't want to be in the market once again fundraising and
Hmm.
having these conversation where you may not have as many metrics to prove, right? So it's about coming to the founders and then having the chat to see, looking at the plans that they have, that this is the number which just seems correct. Probably this is what we should target to fundraise.
Mhm.
This is the role that Flourish could play. This is what we believe should be the value, and then it's often a discussion with these founders to understand whether they feel comfortable with that or not.
And what kind of post investment engagements that you have with founder? Do you handhold them in certain things, in finding the right partners from the ecosystem, because you work with multiple companies in the same segment, and is there a community aspect to it? So other entrepreneurs in fintech can come in and advise the founder. Probably they can do something together. One fintech venture, another fintech venture, can they acquire customers together? Can they share the customers? Can they share talent? W- how does it work?
Yeah, I mean, I think one is that we try and I mean, I don't think we can handhold a company because ultimately it's the operators and the founders who run the operations of the company. Uh, they know their business and their market better than anyone else would, right? And we defer a lot to our founders to do what they are best at doing, right? And for let them drive the company at the end of the day.
Mm,
What we try and do and assist is the companies in different ways, and for different companies you try and help them in at different points and in different ways. So one of the things that we love and we enjoy the most is to see our, as I said, we are thesis driven and we are very thematic driven, is to try and get founders from the same thematic but in different geographies together, right? And
mhm,
get them together to discuss different things. And you know what we one of the things that we do is that we have CEO retreats where we get CEOs from different markets together in one place, and
mhm,
we get them to interact with each other. Now what happens in these CEO retreats is a couple of things, right? One is that when founders, say a company which is building in a housing finance or in climate finance as a space, when they come together and when they're building in similar subsegments, the level of detail that they get into quickly is far more than we can ever get, right? And then they have a lot more to discuss in terms of business models, GTM strategies, target customers, etc., etc., right? So that is the thing that we love the most, where we can get folks from same thematic in a room together. So
mhm,
that's one. The second thing with the CEO retreat is often also for founders to engage with their peers and talk about, okay, you know these are the challenges that we go through on a day-to-day basis. These are the opportunities that we see,
mhm.
and often the founders can relate to themselves the most, right? And when they see their peers
Right.
experience something, there's a very different dialogue which happens, right? Which we think is a power of the community of the portfolio companies that we have created, right? Just to create a safe space for them to share with each other ideas, thoughts, vulnerabilities, challenges, and then explore with each other what has worked for them, what has not worked for them, and create that dialogue, right?
Mhm,
So one thing that has flourished that we do. Besides that, often on the ground in terms of operations, whether it's with helping them with getting access to new talent, research support, getting access to some marketing activities. Often, a lot of times, founders are also looking for strategic advisors. From our access of networks, creating access to those strategic advisors, helping them with any sort of capital raising, whether it's in terms of debt or equity fundraising.
mhm.
So, from our perspective, the more meaningful and the more helpful we can be to our portfolio companies, we try and do that as much as possible.
Got it. All right. So, one last question before we close. I would love to hear your comments on the aspect of PR in the whole investment ecosystem. What is the role of PR, especially since the entertainment shows like Shark Tank India has come up, and then there are publications which are running just to publish who raised fund this week. There come media houses like Your Story, Inc. 42, who do glamorize this concept of raising funds. And then there are, of course, YouTube channels, podcasts like us. So, uh, in Indian ecosystem, the concept of fundraising is really celebrated. Someone who is raising 10 crores in fund is celebrated more than somebody who is drawing a salary of 10 crore. So, uh, how would you comment on this? What do you think is the role of PR in the investment ecosystem?
Yeah, I think my lens at it is is slightly different. Um, the way I think about it is that see, first is that some of these stories being out there has really promoted entrepreneurship and supported the startup ecosystem.
Mhm.
Just in terms of getting the story out there, encouraging people to start up, right? And as I said, being a founder or starting up is not very easy, right? A founder's journey is a very, very difficult one. It just takes a lot of courage,
Right.
emotional support, community support to go out there and start a new venture, right? It may sound very easy. Okay, someone is starting up, but there's a lot more decision making, or courage which goes behind in finally deciding to start up, right? So I
Right.
think what a lot of this has done is at least given confidence to a lot of people to say that, hey, I can give this a try, right? I can give this a shot. This is interesting. So I think it's evangelized the concept of going out there, thinking about entrepreneurship, which I think is very interesting, right, for us to progress, because it's eventually these new ideas, these innovations, which will disrupt the way we do things, and get us new ways of thinking about new ventures, right? Now, I think what is also important is another aspect of PR, or getting the word out there, of funding, is how it helps the company, A, in terms of attracting customers, B,
Mm.
in terms of attracting talent, right? Because, see, often these companies, as they start out, and especially when they're young, they are also fighting against or trying to create a space for themselves amongst incumbents, right? Which, or bigger players who already exist.
Right.
I think what this PR does is helps their message go out a little bit to say that, hey, there's this company which is raising capital, which has raised capital, but more importantly, this is what they're doing, and this is why it's interesting, and this is the space with which they're building, right? Which draws a lot more eyeballs to the end customers, whether it's a end customer like you and me, or it's a corporate to say, hey, can
Mhm.
I use this? Can I try their product? Can I work with them? In a way, right? So it eventually helps the founder in reaching the customer that they want to work with. And secondly, from a talent perspective, right, it helps founders attract the next level of talent to say, okay, this is a company which has raised money. I, as an individual, find what they're building is very, very interesting, and I want to talk to the founder. Let me go have a chat with them, right? So that's another aspect of PR. So I think there are a lot more positives as well, not just to say that it's celebrating funding rounds, but to say that how do you get the word out there for what these entrepreneurs are doing? It's a lot of blood, sweat, time, which goes behind building something. So how
Right.
can we evangelize that, reach it to the end customers, and support them a little bit in,
Mhm.
in what they are doing?
Absolutely. And I think what VCs are actually doing is not just about the funding. VCs are also sort of playing the role of validators in the whole entrepreneurship community. They are saying the founders are, yeah, yes, you are doing the right thing, going in the right direction, and making the founders more confident, giving them the ecosystem support, and inspiring other entrepreneurs when the news comes out that this venture has raised fund from this particular VC. It inspire another person to start something new, start something in that particular space. So yeah, it's indirectly taking the country forward, and kudos to you.
No, no, absolutely. Our effort is always to do as much and support the ecosystem entrepreneurship as much as we can. So it's all efforts in that direction and trying to move the systems forward.
Perfect. All right. Thanks for joining us, Harsh. It was a pleasure to have you on our platform. For understanding the VC's mindset, I think this is really something that entrepreneurs do look out for, do want to know how does a VC think. And thanks for sharing that with us.
Absolutely. Thank you so much for inviting me once again. It's been a fascinating conversation, and
Likewise.
I really appreciate your time.
Thank you, Harsh.